My guest is an expert in the world of fixed income, Seth Crystall of RW Pressprich and Company. We're talking about some transport issues. Seth, let's continue talking about YRC Worldwide because we're making this case about the difference between investing in the company using the preferred stock or even the notes or indeed the common shares. Give us a little overview as to each one.
Okay, we've had a buy on the unsecured notes for a while now. They've bounced around. I mean, they've been up in the 90s at one point, they're down into the 40s. When the exchange happened, they bounced from like 70 down to 50 because there were a lot of people betting that the company wouldn't get it done. Right now, those notes trade close to par. I still think they're interesting. They have an 8.5% coupon. It's a short maturity, but the real milestone is March 1st. The bank agreement requires the company to take out $30 million of the $45 million by March 1st to free up some cash, which the company needs, and they have to do it on an unsecured basis. So I think there's a lot of ways to play it. I think the company could do an unsecured deal potentially if Wall Street firm can sell it. It might be difficult. I think there's also a chance for bondholders to get a second bite at the apple and maybe getting some equity if the equity is trading attractively to go back to the company and maybe get equity. I also like the preferred, and what I think with the preferred versus the equity is that the preferred shares are going to convert if the authorization goes through over 220 common shares for one preferred. If you do the math with the current equity is trading at 87 cents, 90 cents, that's about a $200 preferred stock price. So there seems to be some mispricing in the market. It seems to me that most people, at least the preferreds, are betting that the stock's coming down further. But if you buy the preferred today at 95, you're actually creating the equity at like 43 cents. So that's 50% below where it's currently trading.
So you might be getting it at a discount compared to where the market is telling you the common is.
You would be. I mean, in the best case scenario, the stock can stay right where it is now. Bondholders who converted will be exceptionally happy. If you bought the preferred, you'll be exceptionally happy. It's a win-win for everybody. And I think the note holders who hadn't tendered might end up doing an exchange down the road, so it's not cash flowing out the door, but more equity, and then maybe selling shares because you'll have, over $1 billion, $1.4 billion, $1 billion.
And they'll be getting the shares when they do the exchange.
Absolutely.
Tell me about another company. I want to ask your thoughts about Lear right now because we know that Lear is already, exited bankruptcy. They're a viable trading company. Tell me what's going on with Lear right now.
Well, Lear, I think, is a good contrast to YRC. Lear, as an auto supplier, as GM and Ford is its biggest customers, obviously they suffered dramatically. They're seating, and the problem that Lear basically had to fight with was SUVs and light trucks. And those sales have really fallen off the cliff, especially with gas prices where they went to. It really fell out of favor. So Lear had, in 2005, it started restructuring and actually had taken a lot of cost out of the system. So they had started years ago. The bankruptcy for Lear was not unique, but really what bankruptcy is for. It's to restructure the balance sheet. What they did is take out over $2.5 billion in debt and issued new equity in its place. So what you're going to have is a company, as they came out of bankruptcy, what actually you have is a company that has more cash than debt. And to me, that's extremely attractive. Right now, in the first quarter, GM and Ford are ramping up production from really dismal levels. And, if that continues through the year, we'll have to wait and see. But I think Lear coming through as they did with all that cash gives them opportunity, a lot of flexibility on the balance sheet to do things. And to me, it just presents an opportunity here. On the valuations we have, we think the stock's attractive at the $70 level. All
right. I want to thank you very much. Seth Crystall coming in from RW Pressprich, sharing some insight into the world of YRC Worldwide and Lear. Appreciate it.
Thank you.
Very useful. Thank you very much. Look forward to having you in the future.